Welcome to another video from Trader Stream. Guys, my name is Mawson. So today we'll be talking about trading psychology. Now, the trading has a psychology which you need to have to become a successful trader. So today we'll be discussing about what are the aspects a trader needs to control to be a successful trader in the market and to keep making consistent profits. One of the primary thing that I wanted to highlight is the analysis. Now, analysis is actually good. You cannot enter into any of the trade without a proper analysis, but what generally happens is some of the traders, as soon as they learn something, they want to do analysis, and the analysis is such they would mix multiple strategies together. They would add so many indicators and they would add so many things and make it so colorful, but technically it does not give a good result. So too much of analysis also leads to paralysis. Now, if you can actually see, if you can meet any of the good trader who have been successful trading in the market, they would say charts will never lie. So as long as you're able to read the price action in charts, you do not need whole bunch of indicators which would keep talking about one or the other thing. Now what will happen is, if you mix multiple strategies together, now your reflex action of your brain does not perform the relevant function. Trading is as simple as doing one aspect. It is like repeating the same thing again and again. If you have one strategy which is working, you need to have proper money management and keep repeating the same thing again and again. So it's all about precision of doing the same thing over and over. First and foremost thing is you need to make yourself believe that the market is random. As a trader, what we can do is we can define our entry, we can define our stop loss, we can define our take profit. We cannot move the market. It is not at all possible for any of the trader to be in the market and tell me, what you know, I have placed trades and I have never lost a single trade. Minimize the loss and maximize the profit with the proper money management and stop loss mechanism. Either you have to add a stop loss, or you should have a risk mitigation aspect. As a trader is to cut down losses, not think about the profit, because profit would automatically flow when you keep working towards the losses. Now, the third tip that I want to give is the trade journal. Maintain a trade journal. Now, any successful trader would maintain a trade journal. Unlike a novice or a first time trader, they just want to enter the trade and make money. Now that should not be the focus. The focus should be to come out of the market safe without losing too much. Maintain a trade journal where you would write down your positions that you take every day, and you would also predefine what will be your take profit, what will be your stop loss before you enter into a trade. I'll just give you an example. Let's say you enter a trade at 100 rupee. The ABC stock price is 100 rupee, and you would want to make a profit. Now you would put in a take profit of 110 rupees. Now what will be the SL that you would put in? Now if I have to go ahead and put an SL, what I would do is I would put an SL which will be for 95, which will be a 5 rupee stop loss, and my take profit would be 10 rupee, which is 1:2. Or what I would do is I would put my stop loss as 3 rupee or my take profit as 10 rupee. Now the reason being is, end of the day, money management is what actually wins. Maintain a trade journal. Write in your trades, how much did you take on each trade. Maintain an Excel or write down somewhere. So writing, putting your trade journal in place is one of the tip that I want to give for traders to be successful. Now the next tip is no more tips. If you are someone who wants to be a successful trader, now you would learn how to do the analysis. Of course you can take help from different successful traders. The tip provider is ultimately worried about making their money, not your money. So if it was so pretty easy to make money in the market, so they would have traded it on their own. So why are they into a business of tip providing? Even if you're taking a tip, you need to do your analysis to find out how will you execute and how will you enter and how will you exit. Now the fifth tip is be open to accept the loss. Now if you want to be a successful trader, you need to accept that the market is not in your hand and get ready to accept the loss. It is just that your money management should be such, your loss should be smaller compared to the profits that you actually make. So be ready to accept the loss. Do not be greedy or do not fear. So these two main traits why majority of the traders fail either is because of greed of making more money or fear of losing money. Emotionless trading is what is required. Accept the loss or accept the profit. Emotions should be controlled if you want to be a successful trader. Now the sixth tip that I have is be ready before market hours. So if you are someone who wants to be a trader, serious trader you want to become in life, now you would not treat this as a casino, neither treat this as a gambling. You will treat this as a perfect business. Now remember, business has both profit and loss. Trading is a business. You need to make sure that you need to be ready before the market hours. So these are some of the tips that I have for today for our traders. Of course I will be getting in more tips to understand the trading psychology. You can look at the description box and you can follow us on Telegram channel. You can also like our video and also visit our website. So this is Mohsin signing off from TraderStream. Have a nice day.